In Stocking Up today, Scott Bauer, Trading Advantage, is here to talk about Bed Bath & Beyond. Good to have you on the show.
Always great to be here, Ange.
What is in store for this stock, Scott?
In store, I like that. This stock, I always like this leading up to earnings. There always seems to be a run-up going into earnings. And last week, quite frankly, when the market sold off on Thursday, really sold off hard before the rally, Bed Bath & Beyond dipped down to major support area. I actually bought some call spreads there, anticipating the run up to earnings.
What level then?
It was around, the stock was trading around 40 and a half-ish, 40.75 or so. Stock has rallied nicely since, and the 50-day moving average is above here at 45.84. I actually like some bullish call spreads still going into earnings. If this stock does happen to break above that, there's a lot of air to the upside. Now the market is pricing in about a $4 or $5 move or so. So if we get that, we could be 47, 48.
That would be a big move.
It would be a really big move, and that's almost a 10% move.
Right.
Typically, Bed Bath & Beyond, we see about a 7% move, so the market is pricing in a bigger move. Now, it could be to the downside as well, but the volatility is such that we are looking at a bigger move coming up.
Right, the stock going from $40 to maybe 47, 48 would be huge.
In just a week, exactly.
Another stock that Scott is watching is Red Hat. Now, this is in the technology space.
Yep. Yeah, everything right now in the cloud computing space, anything that has to do with the cloud has been red hot. And now we're talking Red Hat being red hot, so that's a good one there. The average move is about 4%, and that's what the option market is actually pricing in here. I like the upside in this one too. I find very limited downside because you've got both, from a technical standpoint, the 50 and the 200-day moving average right below where we're trading right now. I like an upside play here. In fact, I'm going to go out not just for this week's options, even though earnings are this week. I'm going out to July, regular July options. I'm going to look to buy the 80-85 call spread. I'm going to try and get in for about $1. It's trading, around $1.20 or so. I may raise that bid as we get closer to earnings, but that's the level I'm looking to get in because I think if we get a pop to the upside here again, I think we get a larger than normal pop.
So you are suggesting to the options that you think this stock could trade above $86 potentially in July.
I like it. 85 would be perfect. If I forgot the 80-85 on,
okay,
that's perfect right at the short strike. But I do see if there's an upside surprise here, this thing can really go. And I'm doing that again, Angie, because technically there's some really decent support just below the stock here.
Good to have you here. Thank you, Scott.
Always a pleasure.